there are two issues about the sales, or two ways of thinking about this. We could ask the question, can we make the sales tax better and collect the same amount of revenue we are now? Or could we use the sales tax to increase the amount of revenue? So I'll discuss both of those, but generally the focus now is on how do we get additional revenue. Obviously, the state of Illinois is in need of extra revenue, so the interest is probably more in additional revenue production, not just making the tax better on its with the same amount of revenue. But just to review the situation in Illinois, like 45 or 46 other states, has a tax on what is called retail sales. We'll see actually it's not exactly retail sales. And the state rate is 6.25%. 5% of that is kept by the state, and 1.25 is returned to local governments in various ways. That rate, the 6.25 rate, is not a particularly high rate compared to other states, but as you well know, especially know well if you live in Cook County or Chicago or even Champaign, there are a number of local add-on taxes that increase the rate well above the 6.25%, close to 10% in some places. So the situation we're in is that if you wanted to have more revenue, simply increasing the tax rates has some real problems, because people are going to compare it to surrounding areas that may force some purchases outside the state of Illinois, things of that sort. So a higher rate is certainly not forbidden, but it's probably not a very productive kind of option. So the question is, are there ways of generating more revenue but without raising the rate? And the obvious answer that people have talked about already is find a way to broaden the base, include a broader base, which has both revenue implications and also implications in terms of both efficiency and fairness or equity. So again, we're talking about the second biggest source of tax revenue in the state, well below the state income tax, especially with the higher income tax rate now, but it's still a very, very productive tax. So what I'm going to talk about next is what would an ideal sales tax look like? How does that compare to the state of Illinois? Well, the sales tax is based upon an idea that taxes should be levied on ability to pay. That is, you should make people pay for government services, not based on the services they receive, but upon the some measure of their economic capacity. Now, the various measures of economic capacity, income would be one, consumption another, and wealth still another. So this is one particular way of implementing an ability to pay tax, which is based upon consumption. That is what people use up, not what they produce. So it is an ability to pay tax. In an ideal situation, it would be a very broad base. It would include all sorts of consumption activities, not a narrow base. So a broad-based tax that would tax all sources of consumption would have a base that would come close to the income tax base. But in Illinois, we fall far short of that. So let me talk about a couple areas of exclusion where we do not include things that probably would be part of an ideal base, and then talk about some things that are included probably incorrectly. So the two major exclusions, at least the obvious exclusions from the Illinois tax base, is, first of all, most services are not taxed, and in particular consumer services. So in the mind of a tax expert or an economist, it doesn't make a lot of difference whether someone buys an exercise machine or they buy a membership in a gym. You're still paying for a particular kind of outcome. Or whether you take your clothes to the dry cleaner or wash it at home and buy a washing machine and soap and so on. So from the standpoint of both fairness and the standpoint of not changing the incentives here, there's no particular reason to tax one kind of activity, which is the purchase of what's called tangible personal property, automobiles or records or appliances or things of that sort, and not tax other things which provide the similar kind of benefits. So excluding services cuts down the base. It also cuts down the growth of the tax base, because services are becoming a more important part of our economy, and by not taxing them, we lose a lot of potential revenue in the future. The other thing, which is somewhat harder to, not harder to explain, but maybe takes more convincing, is that Illinois also exempts food at the state level, not necessarily at the local level. And the argument there is that since lower income people consume a disproportionate share of their income on food compared to higher income people, eliminating the food from the tax base makes the tax less regressive. That's true to a certain extent, but it comes at a very big price. So when you exclude food from the base, you're excluding rice and beans for low-income people. You're also excluding lobster and filet mignon for higher-income people. So there's a huge amount of tax revenue that is lost that provides relief to a relatively small number of people. And secondly, those people who are receiving food stamps and use food stamps don't pay a sales tax on that. So to the extent that low-income people are relying upon food stamps for purchase of food, they're not paying tax to begin with. So including both food and services would substantially increase the base. Now there are a number of other things that could be included, but really no one is talking about that. For example, medical services, educational services could also be included, but that's not really on most people's menu. In addition to that, in addition to exempting things that probably should be part of the base, we also include a number of things that should not be part of the base, in particular business-to-business purchases. The idea of a sales tax is to tax things once at the final stage of transmitted from the retailer to the consumer, and not tax it multiple times through the production process. So by taxing business-to-business purchases, we're taxing the same activity more than once in kind of a capricious way. The more a good turns over, the more likely it would be that you'll have extra taxes there. Now, no one right now is talking about getting rid of the taxation of a lot of business-to-business transactions, but if we really wanted to fully reform the system, we probably should look at that as well. So what are the suggestions here? Well, again, the idea, I could do it, say, one of two ways. One, we could lower the tax rate and broaden the base and make the tax fairer and get the same amount of revenue, or we could keep the tax rate the same and broaden the base and get more revenue. So you can think of either of those outcomes. And the second one is probably more important than the first right now. So the first thing would be the taxation of consumer services. So include the things that we're familiar with: dry cleaning, healthcare, admissions to movies and things of that sort, and the tax base, just like we tax washing machines, and we tax exercise machines, and we tax TVs that you bring home to watch entertainment. A second thing would be, and this again is maybe a little bit more surprising, eliminate the state exemption for food, because there's a huge revenue loss with relatively little equity gain there. And what should be done, though, along with that, is have some kind of mechanism, maybe through the income tax or through a refundable credit or something of that sort, to compensate low-income people. So have them pay the tax, but find a way to remove the tax burden someplace else. Consider, but probably not act right now on removing the business-to-business transactions from the tax base. That would be a huge revenue loss, even though it would increase the equity and efficiency of the tax. But this is probably not the time to do that. And the last thing that's on the screen here, I'll talk about one other thing that's also important. Avoid gimmicks. I would call the elimination of food kind of a gimmick, but tax holidays and things of that sort, amnesties, typically produce revenue in the short run, but they're damaging in the long run. They're kind of an arbitrary, capricious sort of way of doing things. One thing I didn't add here that is important is we also have to find a way, or at least continue to find a way, to try to tax purchases over the internet. There's no particular reason why people would buy something over the internet from a remote vendor shouldn't pay the same tax that someone who buys from a bricks and mortar seller. And right now, the Illinois tax does in fact require tax on internet purchases from remote vendors. As David mentioned, though, the problem is that it's not easy to collect in many cases. So we have to find a way to increase the collection ease, and the easiest way, and the way that may be happening in a slow motion kind of process, is to have the federal government enact legislation that would make vendors, regardless of where they are, collect the tax. So again, the sales tax, these reforms are not going to solve, just as in the previous case, not going to solve all our fiscal problems. They would have kind of a dual benefit of making the tax more even-handed, and also presumably raise some more revenue as well.